Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Pereira. The Goods and Services Tax Council on Friday decided to slash rates on more than 175 items, reducing taxes on these from the existing 28% in one of the biggest tax reductions since the new system kicked in from July 1st. The council, which met in Guwahati, has decided to keep only 50 luxury and sin goods like tobacco in the highest slab, paving the way for price cuts in a raft of commonly used goods from furniture to sanitary ware. Daily use products such as shampoo, chocolates, beauty products and construction items such as marble and granite will cease to be in the 28% slab. On this edition of The Big Picture, we will analyze the implications of the GST Council's decisions today. Joining me on the program now are Ajay, former Secretary, Ministry of Commerce and Industry; Badarinath, Policy Editor, The Financial Chronicle; Dr. Arvind Virmani, former Chief Economic Advisor to the Government of India; and Ramaratnam, Muralidharan, Senior Director, Deloitte, India. Thank you to all my guests for joining me on this edition of The Big Picture. Dr. Virmani, I'd like to begin with you. What are your thoughts on the decisions taken by the GST Council today?
So, most of these decisions, there are two issues which were there after the introduction of GST. One was improving the design of the rate structure. The second was to improve the bureaucratic procedures, etc. So, in the last meeting of the GST, which was I think a month or so ago, they focused on the second part, which is the bureaucratic procedures, etc. And on this one, and they had announced at that time that they would set up a committee, etc., and do a more logical and policy-based review. And so, in this meeting, they have actually tried to do that to address the structural nature of the rates. And I'm happy to say, I mean, as a brief initial comment, that many of us have been saying that this 28% bracket is just too huge. This 200 and something, we've been saying it right from the beginning. Of course, we didn't refer to the exact number of those products was not known. So, in that direction, I think it's very good that the government appreciated within 3 months that something needed to be done and has started doing that. I still think there is a way to go even on this structural rate structure part, but very, very good start, I would say. I'm quite happy at it.
Sure. Mr. Dua, as far as the implications are concerned, what kind of implications are today's decisions going to have on industry and the common man?
In financial terms, I'm told that the reductions which have been agreed to in today's council meeting, which is reducing the number of items attracting 28% slab from 227 to 50 items. And those 50 also tobacco, white goods and automobiles, broadly speaking. And a number of items from the 18% slab have been brought down to 12 or 5. The lists are coming out, but that's broadly the decision, which the genesis of the decisions with the Finance Minister of Assam. Since the conference is being held in Guwahati, he is the one who came to the press a little while ago and talked about that, and also said that he mentioned that the limit, the composition scheme financial limit, under which only one, rather than paying tax at different slab rates, the small and medium enterprises whose turnover is up to 2 crores. Earlier it was 75 lakhs, which was enhanced in the last meeting
to 1.5 crores.
To 1.
Yeah, to 1, sorry.
So, and from 1, now it's been doubled to 2 crores. So, there is a reduction, there is a rationalization of the rates as well as its application. I'm told that roughly in financial terms, this means a loss of revenue of 20,000 crores annually for the government. The decision like this should be welcomed by, it's a reduction, and any reduction in taxes, public at large, citizens, common man should welcome it. And certainly the industrial sector, which has seen a reduction in the rates for many ordinary items earlier, like shampoos, detergents, chocolates, those things are also attracting 28%. Those have been brought down, so it should be welcomed by them. But equal kind of warm welcome should come to it from the SME sectors, who find that they, instead of having to file returns for and then calculate the duties at particular rates of interest, if they opt for the composition scheme, which has now got a larger ambit, they would be required to pay one rate. I am not sure whether today's decisions also included reduction in rates for the composition scheme, which earlier were 3 different slabs, 1, 2 and 5, and the Council of Subcommittee of the Ministers had recommended that also being made a common one. I am not sure. As of now, I do not know whether a decision to that effect was also taken.
Indeed.
But even if without it, the fact that its ambit has been, the composition scheme has been enhanced to 2 crores should be welcomed by all.
Are we moving towards, what the Prime Minister has said, good and simple tax? Are we moving in that direction? And is this the final shape that you see the GST taking, K. Badarinath?
It's a very good move. And if you recall, I don't see many, even general budgets giving away revenue worth 20,000 crores. Even if Mr. Pranab Mukherjee had given away 8,000 crores as revenues with no reduction in the duties and taxes as part of the stimulus program, it was seen as a huge, a consumer-friendly measure. But today you see that 20,000 crores worth taxes would be lesser paid by the consumer. That means the consumption demand in this country is being given a big push so that the economic activity is going to pick up in a big time, number one. Number two, the issue here is that are we moving towards the ideal tax regime? Fine. There is a lot way to go, as Dr. Virmani pointed out. But yes, finally it should be just 2 rates, that is 12% and 18%, and most of them have to be subsumed into that. And now if with this latest decision, perhaps more than 86% of the goods and services come into this 12 and 18% tax bracket, whereas the so-called sin products, which now attract about 28%, are minimal. Secondly, you only have one exemption, which is at the odd tax, that is about 3%, which the gold attracts, and most other items like food items, daily consumable items like rice, wheat and other places where you have, if it is not packed, there is no tax at all or there is no duty at all, and if it is packed, you just pay 5%. So sure. I don't think it can be easier at this point of time, and perhaps it's the most consumer friendly measure that the government has taken after having taken a huge hit or being criticized for being a badly designed tax and badly designed services products and bad segregation of products and services under different slabs and that kind of stuff.
Yeah. I just like to comment on the 20,000. There's a number floating around, but what they are missing is the whole point of major tax reform is, like it was for income tax reform 10 years or 20 years ago, is to simplify it so that compliance increases, voluntary compliance. You shouldn't need a danda. So what we are missing in this 20 is a literal calculation, 28 minus 18, 10% and multiplying by something. But in my view, there will not be such a loss, and the loss will actually go down further if this more simplification, as all of us are saying,
this estimate
takes place.
Put out by the council itself.
Yeah, that's right.
The council put this
but
estimate today.
I know how they do it. They just take this 28 minus 18, 10% and just multiply it with whatever the volumes were last year or the year before, whenever they have it. But anyway, the point is compliance will improve. It will be good for small and medium industry and small traders who have been complaining rightly, not wrongly. And of course, it will be good for consumers, as everybody has pointed out.
I know, Mr. Dua, you want to come in. I'm going to let you have your say, but let me go across to another guest who's not had his say on the program as yet. Ramaratnam Muralidharan, thank you for joining me as well. As far as the revenue implications that all the other 3 panelists have spoken about, the figure, of course, has been given out by the GST Council. It now stands at 20,000 crore rupees. Where is the government going to make up for this loss from?
So let me answer that. One is, like as rightly pointed out by the other members on the panel, this loss is computed by assuming that the volumes are going to be same. But what would happen is that with a reduction in the prices, the demands are going to go up, and when it goes up, along with the increased revenue, you are going to get increased taxes. That is one. The second point is that GST is towards increased compliance, and once the compliance increases, automatically you will get the extra taxes. And we should also remember that when GST got introduced, there was an expectation that the tax base is going to get wider and the rates are going to get moderate. And unfortunately, what happened when it got introduced, the 28% slab, which was meant for only the sin goods, more than 225 items got included there. Now with the current correction which has been made, if it is 50 items which are there, it will mean only 4% of the total number of items will be in the 28% category. To this extent, this is definitely a good move. It will lead to price reduction of the items which are getting used on a daily basis. And with the other main aspect or another important aspect which is still open is the ease of doing business, which means the issues are surrounding compliance. If that is also getting addressed, I think we will get the real benefit of GST.
Okay, so you need a holistic development or a holistic view is what you're saying to ensure that, the economy does well. Yes, Mr. Dua, you wanted to come in.
Two things I would like to see, and I wish the government starts addressing this or the council starts addressing it very quickly. One is bringing the items which have not yet been brought under GST. And I have in mind the petroleum products as the #1 item, because one of the largest items traded in the country.
Do you see that happening sooner rather than later?
I think that for the first time,
because the crude prices, Brent crude prices are at almost $64 or $65 a barrel right now.
A very relevant question, Frank. But let me put it this way: the rates of duty which are charged by the state governments, they vary so widely, and some of these were charging earlier 26%. For instance, the state of Maharashtra, till it was prevailed upon, or the airline said that on ATF, if you charge us this, we'll move away. We won't use Bombay as the headquarter. So it's not necessarily that GST would necessarily mean that the petroleum prices go up merely because the international prices of crude have gone up. That's #1 item. Second, I would also have liked to see in this rationalization taking place in the context of cess. Today, cess is one of those things which is more of a revenue fetching feature for the government of India, because it doesn't have to share it with the states. But cess does not allow for cascading effect to be removed, because it's not amenable to that. So these two things, if they also had been introduced or looked at. See, why is cascading or why is cess kept there? Because Government of India has given that statutory assurance to state governments that for 5 years we will compensate you if there is a loss. The fact of the matter is, if you are taking the buoyancy of the tax, that higher compliance, if the rates are lower, then probably the income could be made good from there, rather than having a feature which doesn't fit into the scheme of things. That's the federal government cess.
Sure. Yeah.
So, now we are going to the future. One, of course, is, you have to be very careful with this oil tax, because one of the problems is that rate is much, much higher than 28% incidentally. And you cannot do it without a surcharge. If you're going to bring it in, you're going to affect everything else. And that's not such a good idea. The second point is the surcharges. They are not actually called cess, but I presume you're referring to surcharges. The surcharges are actually necessary. What you want to do is reduce the number of things in the 28, but you got to match some of the important items like 5-star hotels and large cars will have to have higher rates in some way or the other to get a revenue neutral rate. Otherwise, you will have to again end up having much fewer items in the 5-12 category and maintain more in the 28. So a good system has 3 characteristics: simplicity, revenue neutrality, and equity. So you got to ensure equity of the indirect tax system. Otherwise, there will be a big hullabaloo. What we object to is having equity in every item. You cannot have say that all types of restaurants you will have 5, 11, 12, 18, 28. That destroys the simplicity of the system and encourages tax evasion and corruption. So you want simplicity across most of the things, which is why we talk about a single rate for maybe 99% of the item. but you will have to have some items. For example, the ones chosen are quite right: basic foods, education and health, which are exempt. You got to have those, and you also have to have a few items. I believe only 6 or 12 are needed with a higher rate.
With a
but you
surcharge
have
you're
to
talking about.
ensure equity,
Okay.
because that ensures equity.
Yeah, yes, Badarinath, sorry.
In the case of the rates, it's a debatable issue as to which item has to attract what. Yes. There should be a balance between the revenue considerations that the finance minister has, the promises that have been made to the states for compensating everything. And thirdly, the issue here is that there is a commitment by the government and the GST Council as such that these surcharges and cesses will be phased out in a manner so that they are more or less revenue neutral, and the government of India will not be burdened further in terms of revenue losses. This is one point. Second is, in the case of petroleum products, it is an issue that the Petroleum Ministry has written to the Finance Minister saying that the petroleum products have to be brought under GST in order to bring about a uniform structure across the country in terms of retail sales, where there is a lot of mess that is happening.
Sure.
And after that, from the consumer's perspective, it will be much, much easier if we have a single tax on petroleum products as well. And 2 points I would like to make. One is that the implementation part of the GST is still not completely clear, because there are a lot of towns and villages and cities where the retail outlet fellow says that no sir, GST over and above MRP. He charges 5%, 12%, 18%. There are places where you have to pay 28%. So the consumers are getting fleeced despite the high-pitched campaign by the government. We have to find a way wherein the consumers are protected big time, and this should not lead to a lot of variation in discrepancies in the rate. Second issue I would like to point out is, I think the GST Council has to take a call on when the e-way bills, the electronic way bills that needs to be done. It has to be done as quickly as possible so that there's a lot of pilferage that is there should be reduced. Second is that, okay.
Third.
Now, there are several other products which, like Dr. Dua said, that okay, they are still out of the ambit, which needs to be brought into the ambit, and better compliance structure needs to be.
We'll talk about compliance with all the guests, in our last segment. But before that, Ramaratnam, Muralidharan, as far as widening the net and making it a simpler tax, what are your thoughts on it?
Because that is one of the pillars on which GST was initiated, in the sense that once the rates are moderate, automatically the compliance increases. In fact, if you would recall, the 13th Finance Commission headed by Dr. Vijay Kelkar, they suggested a GST rate of 12%, and in the first discussion paper floated by the government, it was 16%. Then we have finally landed on 18, and you saw it going to 28. And then we have again brought majority of the items back to 18%. So that way we are now, I think, converging somewhere around 12 to 18. So that is a good move, and with a moderate rate of tax, the compliance will increase. The second reason why the compliance will get better is that the availability of the credits through the value chain. So if the value chain consists of 5 members, and then 2 of them, even if 2 of them are tax compliant and want tax invoices, the entire chain of 5, you would find them compliant. So this is how a typical GST system ensures a better tax compliance. And I think once the system stabilizes, you would find the revenues automatically growing.
By when, Mr. Dua, can we see the system stabilizing? We've seen a lot of tinkering. The GST Council keeps meeting. Every time they meet, we see something new happening. So when can we see some semblance of, normalcy?
Frank, I'd like you to recall a lot of discussions which we've had in this channel also. Probably if once the states had agreed to have the GST come in, the preparatory time which was allowed was rather short. At that point of time, there were a number of advocates, including I think I was also subscribing to that view, that we need to introduce it, say from 1st of October, not from 1st of July, because a lot of homework has to be done.
But there was the constitutional problem that was there.
Well, 15th September, we could have done it from 14th September.
Okay.
So, you know, that kind of a thing. And if the states agree, the constitution would have got amended, because basically the issue was that when are the states likely to, are they on board or not? Yet we went ahead for whatever reason, political, non-political, I don't want to go into those. I think some of these issues with the glitches which have come up, particularly with respect to the capacity of the GST network itself, the speed, capacity, we have seen how wanting it is, though there were considerable, any number of assurances from the network people saying that that's adequate. That's number one. Second, there was an apprehension expressed that this might turn out to be very onerous for small and medium enterprises, as was pointed out. If one person remains outside in the value chain, then the set-off is not complete, the credit set-off, and you have kept the rates to be almost the same as before, plus there is a set-off there. So that causes problems in that entire system of taxation.
Right.
So I am hoping that, like the GST Council met repeatedly, very frequently when it was to be introduced, in the next 3 months or so, they have feedback that the traders of Gujarat are very unhappy. Why? We all know nobody wants to come within the tax network. If you come within the indirect tax network, probably there will be trails which you are leaving behind for the direct tax,
right,
or vice versa. That we do need to have larger compliance, and one way of larger compliance is a larger number of people coming in, rationalization of rates.
Okay.
I am one for saying there should be no cesses at all, because cesses are against the grain of the GST, the VAT system.
Point taken. Yes, Badarinath, you wanted to comment.
The point here is that the time that we took from the excise duty structure days to value-added tax, we took a lot of time. Right. There was a big mess then. But relatively, I think the GST has, rolled out more smoother. And my guess is it will take at least another 3 to 6 months before GST gets stabilized, number one. When you talk about stabilization and compliance, the also issue here is consumers. Are they getting the full benefit of the GST or not is the biggest key issue for the success and failure of GST.
Sure.
Many of the businessmen, because they either have not taken the GST number, or they are outside the network, as Dr. Dua says, or they would charge whatever they feel like.
Right.
So
sure.
This is an issue.
I'm sorry to cut you short. I'm running out of time. I've got about 2.5 minutes left on the program. Dr. Virmani, as far as the GDP is concerned, almost 55% of the GDP is left outside the ambit of GST. How do we bring that under the GST? You have power, you have liquor, you have petroleum, and you have all these other products.
So as far as petroleum is concerned, the constitutional amendment includes those. So that was just a matter of time. It's a question of whether it will happen 1 year from now or 2 years. It's already in the amendment. The thing which is not there is electricity and real estate, the construction sector. When that will happen is anybody's guess, but I hope these pressures which have arisen from the public, which we are all talking about, will force them to bring these two in. Because the reason why they are not in is because these are the generators, or at least not electricity, but the construction is the generator of black money. And with all this pressure to do things against black money, demonetization, whatever, hopefully this will be brought into the net.
Sure. Concluding remarks.
So the GDP, the effects, estimates from economists were 1 to 2% increase in productivity. That we will not see till at least a year after the thing, but that will happen quicker if these reforms are completed in the next 3 to 6 months.
Muralidharan, please close the show for us with your concluding remarks on what to expect in the near future.
Okay. In fact, on the rates, after the implementation of GST in July, we started addressing the representations on piecemeal basis. This is the first time when there has been a comprehensive addressal of the issue. Similarly, there are two important baskets which need to be addressed. One is the compliance basket. there are a lot of difficulties faced by the medium and small scale companies in terms of the filing of returns, compliance, and we have not even come to the matching of credits. So this is the second basket which needs to be addressed. The last one is that there are a lot of pain points in terms of the rules and regulations. Like, I'll just give you one example, that if there is a free of cost supplies with a related party, then there is a GST. For example, if an electricity company you take, which is outside of the GST, but if the head office cross charges some amount to their own units, generating units, there is a GST to be paid, and that GST will be a cost, and it will increase the cost of power generation. So there are this one example, but there are a lot of such examples which are pain points. So we need to address those pain points as well. If these two aspects are addressed, I think it will enable a more smoother GST system.
All right. On that note, call it a wrap on this edition of The Big Picture. I'd like to thank all my guests for joining me on the program and putting things into perspective for us. That's all from me. See you again next time.